Thatcher Taylor, ProPath Financial. How do you save more money into your tax-free bucket if your income's too high? It's called a mega backdoor Roth contribution in your 401k. Let's talk about it. So how do you put more money into the tax-free bucket of your retirement plan if you make too much money? Here's what I mean. To contribute to a Roth IRA and you make too much money, the income limits come into play, you can't contribute to a Roth IRA. You phase out. So it's really difficult to get money into your future tax-free bucket because remember, Roth, money goes into either Roth IRA or Roth 401k after tax, grows tax deferred, and then in the future, as long as you keep the rules, you don't break the rules, the money can come out tax-free. That means your contributions, the growth, the earnings, everything. But one way to do that if you make too much money is if you have a 401k through your employer. You can potentially use what's called a mega backdoor Roth contribution. So let's just go through it really quickly. I've written a lot of it up on the board. I'm going to be drawing a little bit with my marker. Sorry if you hear an echo. Hopefully the headphones are cutting that out. But this is going to be really valuable. So why would you do a Roth 401k, a mega backdoor contribution? More tax-free money. We discussed that. You can contribute more by using this method, which we'll go over in just a second. This allows you to put more into the Roth above the contribution limits that the IRS sets. Where does this happen? In your 401k through your employer, and sometimes even if you have your own solo 401k if you're an entrepreneur. This all happens, this whole procedure literally happens wherever the 401k is. If it's at Fidelity, Schwab, Vanguard, whoever is the custodian of that 401k for your employer, that's where this is all going to go down. So remember that as we go through this. Who would do this? High income earners. You exceed the income limitations of a Roth IRA. I'll link below another video if you want to check out like Roth IRA income limitations. Mention that right here. You want more tax-free income. So people who want in retirement or in the future more tax-free income from their investments, that's who would do this. What is it? You're essentially going to take after-tax money, you put it in the after-tax, I'll put a little quote around that, the after-tax bucket. Once it hits that after-tax bucket, you convert it to the Roth 401k. How do you do this? Great question. Let's come over here. If you can see, I wrote some stuff out for us. Think again, 401k, not any other account type. Only think of 401k. If you are under the age of 50, the maximum amount of money that can go into your 401k, that can be contributed to your 401k, is $61,000. That's the most that can go in from your salary. If you're over the age of 50, you get an extra $6,500 catch-up contribution. All this, let me put right here, is for 2022. The majority of the money that goes into a 401k is broken up between an employee, the elected deferral, the money that you choose, the percentage of your salary or pay to go into the 401k. The other portion most likely is the employer contribution. Most likely a match, sometimes a profit sharing, things like that. The most that you can put in any given year as an employee contribution is $20,500. It doesn't matter if this amount of money goes here or here. We'll get to these buckets in just a second, but I just want to point that out. You get $27,000 if you're over the age of 50. The employer contribution, usually a match or a profit share. I'm just using a round number just to make things simple. Say $10,000. Say the employer contributes $10,000 on your behalf. That leaves up to $30,500 that can go into your 401k. So let's pause here on the numbers. For this whole plan to work, you need to have 3 buckets in your 401k. The 3 buckets are going to be determined in your plan by the employer and whoever created the plan. The first thing you need to do is 1, check with your plan. You need to make a phone call. You or your advisor needs to make a phone call to find out if your plan has these 3 buckets. If they do, we're on the right track. But this is a big one. We got to make sure that they have the after-tax bucket. That's what we want to check. So let's go back to our numbers. This number right here, $20,500. You have the option of putting it either here or here. These are your two options. You can put that money either here or here in any combination, which is great, but that's the most that you can elect to go into either one of these buckets. Because this is kind of a separate bucket, this after-tax bucket, but it's vital to this process. The employer contribution, as of right now, is always going to go right here. So the employer contribution is always going to go into your pre-tax bucket at this point. New legislation may change that. So this right here is always going to go here, 10K, or whatever it may be. It's not always 10K. It could be, there's a variety of numbers that it could be. So let's say you put your money here or the post-tax, doesn't matter. You have $30,500. Here's the exact procedure. You have the ability to pay your taxes, have this amount of money go into here, into the after-tax bucket. It's basically a brokerage account at your employer. Basically a brokerage account at your employer. Here's where it gets interesting. This is where the mega backdoor Roth IRA, you need to also check, if this procedure is allowed. So what happens is you take $30,500 or whatever number you choose. It could be any amount. And essentially what happens is right here, there's a little bridge that this $30,500 can roll and fill in this post-tax bucket, which is your Roth bucket. This is the convert. It converts from the after-tax bucket over into the Roth. That's the mega backdoor Roth conversion or contribution, whatever term you want to use, where your after-tax money, after you've done the employee contribution, the employer match is going to go into here. Then the excess goes into the after-tax and converts over and helps fill up that Roth bucket. This is always now in the Roth bucket and can in the future filter over to a Roth IRA if you want to. That's optional. This is how the mega works. So let's go through it one more time. How does it work? The max amount of money that can go into a 401k is here. The employee contribution, the max amount is $20,500 or $27,000 if you're over the age of 50. Employer contribution is whatever it's going to be. Whatever's left over is the amount of money that can potentially go into the after-tax and can be converted over to the Roth IRA. You need to check with the plan, make sure the procedure is allowed, and then number 3, make sure it fits. Make sure that this strategy fits your particular situation. It may or may not, but make sure that it does. Consult with your CPA, your advisor, anybody that you find valuable as you make these decisions, preferably a financial planner, if you will. But I hope you like this video. Comment below. Let me know if you have any questions. Let me know where I can get better. Thanks for watching.